Okay, Avinnash Gorakssakar joins in with his sense of the fundamentals. Avinnash, before we talk about a bunch of stories that are doing the rounds, I don't know if you look at KEC International. No, a lot of people tell me that if you look at the fundamentals of the company, it's not a bad stock to look at, and you could probably look at once the market stabilizes. But there's a big move out here. Do you like the story? Do you like the stock?
No, I think considering the last Q4 numbers, I think the numbers were quite encouraging. I think both on the top line as well as profitability. And I think today's spike has come after the company bagging a big 1,000 crore order. So I think that could possibly be the reason for the spike today. But clearly, I think if you look at the business, almost 70 to 75% comes from the export markets. And clearly, they are a market leader even in the domestic market in the transmission tower line. So clearly, the order book is very strong. I think the order book is at least almost 2 times FY15 kind of annual number. So clearly, I think, in terms of business visibility, I think definitely the company does not have to bother about the top line growth. But I think margin improvement is something which probably, after the fourth quarter, markets are looking at the fact that this margin improvement could at least be sustained. On the leverage side also, they are trying to make efforts to reduce the debt on the balance sheet. But overall, I think looking at the kind of investments coming in the power sector and the distribution space, I think KEC definitely, if one takes a longer term call, Neeraj, I think definitely it suits a good medium to long term kind of upside.
What's the view on Dish TV right now, Avinnash?
Dish TV also, I would say that, I think the kind of numbers the company presented were a complete positive surprise, a very strong profit beat number in Q4. And more importantly, the kind of additions which the management has recorded and the kind of commentary post the results, I think were very strong. So hopefully, I think in FY16, one could see the company now making a full profit.
Sure.
And clearly, I think, even at these levels, despite the fact that the stock has seen some weakness, I think it's a good medium to long term kind of hold.
Yeah, but from an investor standpoint, would you look, and especially for investors who've had a lot of patience with this story of over a year plus, given their turnaround getting a bit delayed, 45% is the kind of year-to-date return. I think if you can just flash that again for our viewers, does one take that money off or does one hold, continue to hold actually?
No, I think, Tanvir, I think if you take a slightly longer term kind of time window, I think clearly, once GST comes in, you could see a further expansion in the EBITDA margins. And this, the management has gone and spoken on record. Without the GST coming in, the margins have improved, bottom line has come in the green. And I think as long as, they keep on adding subscribers and the GST shift also happens, I think definitely a year and a half, I think this could definitely give a good hefty return. So I think, investors who have waited long would definitely be rewarded provided they hold the stock for at least a year and a half.
So continue holding.
Exactly.
And what's your target on this one from 100?
We had taken a position here around 78, 77, and we have been telling our clients to actually hold on. We have a target of around 140, 145.
Double from here as well. Thanks very much for that view, Avinnash. Just stay on with us. We need to. It's Tuesdays.